All right, hey, what's going on? This is Dan Keller, co-host of beersandhomebuying.com with Christian Awesome and Les Cutting. Hey, this is the first beers and home buying class that I've missed in like 4 years, 3 years, 4 years. My son Hudson is playing on a select baseball team, and he's 8, playing with some 9 and 10-year-olds. And they were not supposed to win Monday night. Monday night was supposed to be the last game of the year. They're in a postseason tournament. Well, they won. And they're playing in the championship game tonight. So give you kind of a background on me. Before I got in the mortgage industry, I was a college and semi-pro baseball coach. So baseball's kind of a big deal. My son's kind of a big deal. So I'm producing my part of tonight's presentation, the typical presentation that I do, via video. And so in a minute, I'm going to change screens, and I want you to stay with me. This is, and I would say this if I'm live, this is a unique opportunity that you have right now. And I'm not just saying this because I get to co-host and I do business with Christian and Les, but to have 2 of the best real estate agents in the Seattle marketplace giving you insight into the market. It's invaluable. Same thing with myself. I'm sure Christian and Les, if they haven't already, are going to give me an introduction. One of the top lenders in the whole entire country, one of the top lenders in Seattle, co-host of Seattle Real Estate Radio with Christian. And I don't say that to brag. I say that to put value on the importance of education in today's marketplace. You know, the CEO of Zillow, I think Spencer Ratkoff is his name, came out and he presented at one of the top real estate events about a month ago. And he said the future real estate agent is a teacher. The future lender is a teacher. And as automated and techy as our industries are getting, we still need educators and teachers helping you make a smart financial decision. Listen, I don't care if you're buying a $200,000 house or a $2 million house. Buying a home is one of the largest and most serious financial decisions that you will ever make. Christian and I can give you numerous examples, from a young Amazon employee that we helped purchase a home in 2013. I just refinanced the kid. He bought a home for $365,000. Today, in 2017, the house is worth in excess of $800,000. So if you don't understand the value of getting solid advice and the importance of this financial decision, by the end of this class tonight, you certainly will. So come on in. I just wanted to give you an introduction. I'm going to talk about the ins and outs of financing in 2017. A lot has changed. It's tougher than ever. I'm telling you this. We fund about 20 to 25 home loans a month. That's a lot. And I can tell you that it's tougher than ever. Again, I don't care if you're buying a $2 million house and putting $1 million down, or if you're buying a $300,000 house with 5% down. You're going to encounter turbulence. And my job today is to kind of prep you on the types of turbulence, to prep you on how to win in a very competitive market, and to give you just some solid advice that will help you make very sound decisions with your next home purchase, okay? So come on in and let's get to work. All right. All right, so we are ready to rock and roll. So I start every presentation off. If I was live, I would ask the audience, hey, as you were driving out tonight to the shelter, what questions, what concerns about buying a home do you have? If you are specifically coming in to meet me to get pre-approved for a home loan, what concerns do you have right now about getting approved for a home loan, about just buying a house in general? I ask every single client that I meet with those questions, and I'm going to share some of those with you. The number one concern right now in the marketplace is bubble. The second one is competing with all cash, and the third is down payment. And so let's talk about those. But I'm going to move my little video up to here so you can see the top 8. So are we headed toward another bubble? I don't believe we are, and I'm going to show you proof. If you become a client of mine, or if you would like to receive a copy of this, every single Friday I do what's called Making Sense of the Market, Making Sense of the Market presentation. It's a 3 to 4 minute video, and I talk about the market. I talk about what's going on in the market, what's relevant. You have to understand this. If you're watching the news, that's reactive. If you're simply going off what's in the news, you're simply reacting to what's happening in the marketplace. So I want you to take a look at this. This is from a week ago. I did a comparison of 2005 to 2017. Are we heading toward another bubble? And no, we're not. So look at this real quickly. The 2005 bubble was dominated by 100% financing, no equity, no skin in the game. Today, every single client has to be credit, income, and asset underwritten, meaning they have to have some skin in the game. A down payment is required. Yes, there are some certain zero down home loans, but for the most part, you need a down payment. Second, the loans were built around interest only and adjustable rate mortgages. Today, everything is fully amortized and 30-year fixed or 20 or 15-year fixed. Very few adjustable rate mortgages. I want you to look at this. In 2005, there were very few cash transactions. In 2016, 2017, heck, since 2014, there's more cash transactions in the marketplace than ever. There's also in the Seattle area a transfer of wealth in and out of the marketplace, which is a totally different discussion, but that's good news for stability in the marketplace. Something that's extremely important, and you're gonna, as a home buyer, you're gonna feel a bit of this struggle and pain, but appraisers in 2005, appraisers did not have to be accountable to anyone. They were actually pressured by real estate agents and lenders. Today, appraisers answer to underwriters and agencies. Appraisers are neutral. They cannot talk to lenders. They cannot talk to real estate agents on transactions. And so they are separated by commissioned parties, which is good, from commissioned parties, which is good, meaning they don't have any skin in the game with a particular real estate agent. They're randomly selected. That's huge. Let me move this video, or excuse me, my mug out of the way. In 2005, there was very little intent to occupy. There was a false demand of home ownership. Today, you have to purchase with the intent to occupy the house or with a renter or owner, okay? That's really big. The last thing, which is the most important one, job growth in 2005 was mostly seen in the real estate and financial markets, construction industries, and tourism industries. Today, the job growth is in health, financial, and tech industries. They're more diversified and less cyclical. And as you can see, the future of America is riding on the coattails and the strength of the tech industry. So I think that's, again, I'm never going to give you information that's my opinion. Certain things, sure. But a lot of the times, Christian and I and Les, we talk about facts. We share facts. So the second thing is, how do you compete with cash? I'm going to fast forward to that in a minute. But the other one is down payment. How do you compete in a heavy cash market with a little down payment or even with 20% down? That's a great question. And so what I'm going to do, the next slide I'm going to go to, I'm going to answer that. But since we're on this slide, I want you to understand that I think what's most important as you guys are prepping for a mortgage is for you to have an understanding of these three variables. Write this down. What are your down payment goals? When you come in to meet with me and Christian, we're going to ask you this. What are your down payment goals? What are your monthly payment goals? And then what is your 5 and your 10-year plan as it relates to this house? Write those down. Don't answer those right now, but I want you to think about those. And then I want you, if you have any fears surrounding home ownership or getting a mortgage that you don't see on here, let me know. And I like to add those. Is it a good investment? Am I credit worthy? I'm in a lease, Dan. How do I get out of a lease? Christian's here right now. Ask Christian. It can be done. You're not tied to a lease. Christian's a landlord. I'm a landlord. I'm fine with any of my tenants exiting a lease because I'm going to get more for rent, okay? So you can exit a lease. Let me move on to the next slide. All right, so how do you, answering those questions, how do you compete with all cash offers? How do you compete with very little down? Your financing and your real estate strategy matters more than ever. So right now, the market's hotter than ever in the Seattle and surrounding areas. Christian and I have specifically put together 5 key steps for getting your offer accepted in a hot seller market. From a lending standpoint, I'm talking about myself right now. Number 1, and this goes for real estate agents, your reputation matters more than ever. So you need to check references. If you're interviewing lenders, I want you to go to Zillow, and I want you to go to Yelp, and I want you to Google the lender. Specifically, I want you to ask that lender for references, 5 references of professionals or past clients. 3 of the 5 references need to be professionals that you funded mortgages for in the past 30 days. All right, that's big. but check references. And then local is key. Not a credit union, not a large bank, a local mortgage banker like myself. Christian can give you more information on the benefits of that. Number two, and I'm just telling you this is what sellers and listing agents want to see. So we've built our strategies around, I've interviewed Christian and said, hey, if you got, well, his Green Lake listing last month had 30 something offers on it. What specifically were you looking for, Christian? And these top 5 things would have helped a borrower win their offer, okay? Reputation matters. Number 2, a pre-offer call. I personally call the listing agent and ask to speak with the seller, if they're with the seller, and introduce you, the borrower, to them. The strength of your approval, the fact that you've already been fully underwritten, the fact that I'm local, who we are, the fact that we can close if needed in the next 20 days. That's really important. The seller wants to know who's managing the financing for the person purchasing their house. They're purchasing another house, or they may be moving out of state. They need to know that there's not going to be any issues. Again, reputation comes into play. Number 3, like I mentioned just a second ago, I get every single one of my clients fully credit, income, and asset underwritten. Christian will tell you not all banks do that. In fact, most don't because it costs money up front. We do. I don't ever send anybody out into the marketplace without being fully income, asset, and credit underwritten. Number 4, you've got to be in a position to remove contingencies. Christian's going to talk about the main contingencies if he hasn't already. But you've got to be in a position to remove the financing contingency and remove possibly the appraisal contingency, or at least add an addenda to the appraisal contingency, okay? The only way you're able to do that is through preparation and having the knowledge. Knowledge is power. The last part of number 4 is being able to increase your earnest money to show how serious you are. Number 5, working with a lender that can offer a quick close. Our ability to close in 21 days or less gives you the ability to compete with cash. The reason why we can consistently close in less than 21 days is because we do all the heavy lifting, we do all the work up front, okay? I want to go back to something that's really, really important, something that I've built my business around. Fannie Mae, which is the #1 insurer of mortgages. Let me move my video out of the way again. In 2016, they surveyed hundreds of thousands of homebuyers across the country, and 7 out of 10 borrowers were dissatisfied with the home loan experience. To piggyback on top of that, 7 out of 10 files get declined or encounter delays during the underwriting process. And that's due to an industry-wide standard that really isn't set too high in the mortgage industry. It's almost like taking a reactive approach versus a proactive approach. So what I've done is I've built my mortgage practice around being proactive and serving my clients. And let me get this out of the way. The top 3 concerns, as I read this survey, I dug a little deeper and I found out the top 3 concerns that borrowers had with their lender. Number 1 was bait and switch. On the internet, they saw interest rates advertised much lower. For example, BECU or Wells Fargo or Quicken, if you go to their website right now, you'll see 3.875 being advertised. However, once you're fully pre-approved, the underwriter could come back and say, well, based off of your credit and your down payment and this and that, the fact that you're buying a condo, your interest rate is 4.25. That happens a lot. That's not the old bait and switch where a lender would say, hey, our rate's 4.125, come on in, and they get in, it's 4.5, and the lender made a bunch of money on the back end. Those days are long gone. But the new age bait and switch is the internet. You can't believe what you see on the internet. There are over 29 factors that impact a rate quote, and it's important for you to understand that. Number 2 is communication. Lenders do a terrible job communicating. The 3rd complaint is missed closing dates. If you say you're going to close on the 20th, you better close on the 20th. I'm going to take a second. I want you to discuss real quickly amongst yourselves, what do you think out of these 3 was the #1 complaint? Okay. Christian's going to give $100 to the person that guesses. No, I'm joking. The #1 complaint. This guy right here. Communication. Okay. So I built a business. Christian's probably introduced me already. I built a business around the book Raving Fans. The whole idea around Raving Fans is to find out what your clients are looking for and deliver above their expectations. So I make 3 promises during the home loan process. The first is we communicate every single Tuesday and Friday proactively with you. Now, this is once your offer is accepted. Christian does plenty of home loans with us. He refers plenty of people over to us, and he can attest, Christian and Les both, that we do this. It's gospel. It's by the book in our office. Number two, I personally guarantee our numbers. So if I tell you your interest rate is going to be 4.125, it's going to be 4.125. Any difference in fees and any difference in cost, we pay the difference. Number three, we close on time every time. Ask Christian. Very rarely, if ever, over the last 5 or 6 years of doing business with Christian, have I ever missed a closing date. And if so, most likely it was something that was out of our control. Okay, it's very important that we honor these three promises. So what I do is I put them in writing and I put my money where my mouth is. All right, I don't want to scare you. I don't want this part of the presentation to scare you at all. What I do want is to show you that, and I guess introduce the reality that buying a home is tougher than ever today. Getting a mortgage is tougher than ever. Get this. Dodd-Frank Act that was rolled out in 2010, updated in 2013, and updated again in 2015, along with the CFPB, the Consumer Financial Protection Bureau. They're there to protect you. Great. I think it's great regulation that's been imposed on our industry. However, it's made it tougher for you to get a home loan. You know, not even, let's take those two things into consideration, but then let's factor in appraisal concerns. At homes being escalated and maybe homes not appraising at value. Much more cash in the marketplace than ever, and then inventory issues. Guys, you take all of these variables and factor those into the home buying process, it's tougher than ever. I've already explained to you what Christian and I have put into place, but I want to take a moment and ask you right now, if you put your trust and you put your faith in professionals, we tend to make things happen. If you go to my Yelp and Zillow pages, if you do the same thing to Christian, you're going to find that we have a lot of success stories. And just like our guy Russell Wilson says, the separation is in the preparation. It's exactly what we do here. So the last thing I kind of want to talk about real quickly is the analogy that I use, are you ready to fly? You know, it doesn't matter how great the pilot is. What I want to do right here is I want to move this up here. It doesn't matter how great the pilot is, but no pilot knows before they go and take off what they're going to encounter in air. Let's even take a step back. I think what's important for you to understand is, you know, I took a trip to the airport to go to a conference in San Antonio 3 weeks ago. Left 2.5 hours early. I was on time, feeling good, had my coffee. I pull into Northgate on I-5, stop and go traffic, and I just get slammed. I get rear-ended. I was late. I almost missed my flight. I couldn't have predicted that. I couldn't have prepared for that. In fact, I did. I left 2.5 hours early. There are things that we can't control. I want to take this moment right now and tell you, this is not going to be a glamorous, simple, smooth ride. We're going to do our best to make it that way, but there are things we can't avoid. There are things we can't predict. There are things that are going to happen. It's called turbulence. I'm going to show you real quickly, and there will be a handout that I can give you. In fact, I've documented there's 83 ways that we could and we will encounter turbulence. So just hang in there. You've got a great flight crew. I tell everyone, if you're working and when you're working with a professional real estate agent and a professional lender, good things tend to happen. We tend to end landing that airplane right on the runway versus in the Hudson River, like that one movie. So I'm going to wrap up with this, you guys. I think it's important for you to understand what to expect next. So let me pull up this slide, loan process. Christian's probably already talked about this. You start the process by getting pre-approved, understanding your budget being the key word. The next thing you do is you select an agent, an expert negotiator, someone that has a great reputation in the community. Zillow and Yelp will help you find that. I'm going to personally tell you that Christian and Les are second to none, but that's just my opinion. Then you start your home search. Once you've been fully pre-approved and you understand your budget and you found your realtor, then you start your home search online. You go out and tour homes, and then you make an offer. You sign your contract. A home inspection, if you haven't already done a pre-inspection, is what's next. Then it's followed by an appraisal, and during that time period, we lock your interest rate. At that point, we go back into underwriting, and we have the underwriter sign off on the rate lock and the appraisal, and the underwriter will issue a CTC, which is called a clear to close, and at that point in time, we issue closing disclosures to the escrow department. The last thing that takes place is you sign your final closing documents at escrow. Escrow is the neutral third party that manages all the money for all parties involved. Once you sign your final closing documents, that next day we'll fund your loan, and typically by around 5 or 6 o'clock you get your keys. Okay. That's pretty much it. I want to wrap up with this, you guys. I think it's important for you to understand. I will send you this information. Here's the slide where I talk about the 29 factors that go into, 30 factors, excuse me, that go into a mortgage rate quote. It's so much more complicated than the internet makes it sound. I will send that to you. We'll go over that. I want to talk about two things right now. Understanding the importance of the financial benefits of owning a home. One, you get a tax write-off. Two, you get a tax write-off on the mortgage interest and the property taxes. Number two, it's a forced savings account. Every single month you're paying down, you're paying down your mortgage. And then number three, homes are appreciating. They're appreciating at 7 to 9%. You take that over a 5-year period, and that's a pretty good amount of money that you're saving. It's a forced. Combine that with paying into your mortgage and appreciation. It's a savings account that you're just sitting on. And they've always said, I've talked to 80-year-old people, I've talked to 50-year-old millionaires, and what they say is one of the best investments out there is real estate. The last thing, I'm real big on financial literacy. Don't save what is left over after spending. Spend what is left after saving. That's from a fellow financial planner of mine, Dave Ramsey. There's two big books right now that I think you need to read if you're interested in this. The Millionaire Next Door, and then Tony Robbins' book, Unshakable. I'm getting you into a lot of debt, and I look at it as my job to help get you out of debt. All right. I've put together a 6 Steps to Financial Freedom packet. I'm going to send each one of you guys the copy of that via email. And I look forward to meeting up with you one-on-one. What Christian is going to do in a minute is he's going to put together a sign-up sheet for you to sit down. We'll go over your credit. We'll go over your budget. Christian will go over your home search goals and your timeline. It's an opportunity for you to sit down and go over that information with both Christian and I together. It's a great opportunity. So wish I could have met you live. I look forward to meeting up with you one-on-one. And I'll let Christian and Les wrap up from here, okay? Take care, you guys.